I'm your host and mortgage broker, Rashad Abdul. First off, thanks for tuning into today's video about everything credit score. In under 10 minutes, I will provide to you the framework on how to improve your score. However, it is completely up to you in order to use these tips for your credit to actually increase. Now, before we get into the immediate list, let's do a quick rundown on everything credit. First, you're going to want to understand what your credit score, the numerical value, actually is. That numerical value correlates to your risk tolerance from the lender's point of view as to them looking at you as a client. So you're going to want to know what the actual numerical value is. You're going to want to know the types of credit you're using, how long those sources of credit or those accounts have been opened. You're going to want to know any major credit events that are reporting. So business liquidations, consumer proposals, bankruptcies, etc. It's important to manage your credit score because it has a lot of real life impacts. It can be the difference between you qualifying for a mortgage or not. It can be the difference between you paying tens of thousands of dollars more in interest or not. Understanding your credit and improving your credit score is truly a noble cause in the Western world. So your credit score acts as a sort of litmus test or financial indicator from a lender's point of view as to how much risk that potential client would pose. So it's really important to know what your credit is and check it roughly twice a year. Equifax and TransUnion are the two major credit reporting agencies. Like I said before, it's important to check your credit score roughly twice a year. And I would recommend here once with Equifax and once with TransUnion, because the two agencies actually measure their credit score differently and can reflect differently. So I'm going to leave links in the description below for you for more resources and more information on everything we're talking about today. And watch until the end because I'll leave a bonus 11th tip for self-employed and business owners. So stay tuned for that. So without any further ado, let's get right into the video. Number 1, pay on time, every time. This is arguably the strongest variable, roughly 30% on how your credit score is measured. This is your payment frequencies. If you've had any late payments, if you've ever gone to collections, you're going to really want to make sure you're paying on time, making sure you're never going to collections and paying it off as soon as possible. That will improve your credit score more so than anything else on this list. So, number 2. We mentioned this previously, but credit and credit-based accounts like loans age like fine wine. So credit score looks at older accounts as being safer. There's more data to scrub through. And there is just more to work with as opposed to new accounts where the risk is perceived as higher because there's just more unknowns. So you're going to want to not close old accounts even if you don't particularly use them. However, keep watching because we're going to talk about that. Number 3. Get ahead of consumer proposals and other major credit events. So you're going to want to first acknowledge the proposal. You're going to want to pay it off as soon as possible. And then you're going to want to request a full performance and also related release forms so that you have proof that all of these proposals and these debts have been paid. This will come in handy in a later part of this video. Number 4. Requesting manual revisions. Another really important reason why you should make sure you're checking your credit is so that you can ensure the accuracy on everything in there, from personal details to how your credit is being reported. A lot of the times, or some of the times, there can be errors on your credit which can impact your credit score. So what a manual check review is going to do is you're going to actually have to call them TransUnion or Equifax, and you're going to speak to an actual worker there, and they're going to manually review that report with you, and they can make changes that will happen much quicker than it going through the process normally. There's nothing worse than you having paid off your taxes or your debt proposals or whatever it may be, and for it to not be reporting accurately and still impacting your credit score. So number 5, checking your credit. Yeah, we spoke about this before, checking twice a year, once with Equifax, once with TransUnion, so that you can ensure accuracy. You can track your progress. You can see what's working or not. You can see what variables are holding you back from improving your score. And you're going to get a wide financial picture on what lenders are seeing about you. So you're not going into this blind. You're going into this prepared. And this channel is going to be about financial freedom, mortgages in Canada specifically, and how you can achieve the dream of home ownership. So at the end of the day, that's what we're going to be talking about. That's why I got into this as a business to begin with, because I am one of you. I know how hard it is now in this housing crisis, more than ever before in our history as a country, and this could become an international phenomenon where this has never been this challenging before, So without any further ado, let's continue with number 6. Experian Boost. Now you're going to want to Google search this Experian Boost, and you're going to want to look for related products or services in your area that has a similar impact as Experian Boost. So what is Experian Boost? Experian Boost is a way for you to increase or rebuild your credit without having much credit available to you. So you don't currently have a mortgage or a line of credit or a HELOC loan. So say you're renting right now. So you have car bills or utility bills or rent bills, actually. So now with a service like Experian Boost, you can connect or link your bank account to your credit, and it will show bills like utilities being paid on time regularly, and the same with your car and your rent. So it's showing payment frequency with other unrelated objects or items. And it's another way for you to boost up your credit score without having any major credit yet. So that's a great place to start if you're either new to the country or you're new to credit and you're young, or you want to rebuild your credit. So that's a great little service there for you to check out. So number 7, use multiple cards. Using multiple cards does a few things for you. It will ultimately increase the amount or the diversification of the types of credit being used. Over time, your credit will increase for those specific cards, so your loan limits will increase, and that will increase your utilization ratio, something that we're going to talk about later in this video. And it will actually also increase the amount of older accounts that you have. So all of those things are going to help you build up a credit history that is diverse. It's old, so it has a strong foundation, and it will have a positive impact on your credit. Actually, a little bonus tip related to multiple cards. Since it's kind of really hard or really challenging to cycle through multiple cards, like a lot of people like to stick with 1 or 2 cards that they use primarily for everything. So one little recommendation I have here for you is use the cards that you don't normally use for recurring subscription payments, small minimal charges. So your internet bill or your phone bill or your subscriptions, for example, put those on your multiple cards so that they stay active. And like we said, they're building up your credit across cards. So great little way of improving your credit. So number 8, lower your credit utilization. So what is credit utilization? Credit utilization is basically how much have you been given as a max. So say you've been given a credit card and with a limit of 5,000. So in this little example we'll run through right now, let's say you have $2,200, right? I don't have a calculator with me, but $2,200 owing and a $5,000 limit. So that's $2,200 divided by 5,000. And I just know this off the top of my head is 0.44. Times that by 100, that's 44%. So now that credit utilization for that specific card is 44%. Now, the general rule of thumb is that you want to try to keep your credit utilization across your credit accounts at a roughly 30%. 30% or under. You're not going to want to keep it higher than that because you're showing potential lenders that you're over leveraged, that you're borrowing money, but you're using all of the money, and it's seen as a bit more of a risk, if that makes any sense. And I know that sounds a little counterintuitive because you were given or awarded that 5,000 limit, so why not use that full limit? But it will make you vulnerable to certain amount of risks, like over leveraging yourself, maxing out your card, and maybe even going above your limit. So there is a number of reasons why that can impact your credit score negatively. And let's move on to the next one. Number 9, avoid hard credit pulls. Hard credit pulls are different than soft credit pulls in that they will show up as inquiries on your credit report. So right at the top of your credit, like you scroll up to the first page, you will see INQS. It'll be inquiries. So those are the inquiries that different companies or different individuals have pulled your credit to see what your credit report looks like, and those inquiries actually show up. So you're going to want to avoid hard credit pulls if they're mounting up. If you have numerous amounts of inquiries, that'll actually reduce your credit score. So be really diligent on who you allow to pull your hard credit pulls. Of course, sometimes, like me, like a mortgage broker, you're going to need to use a hard credit pull in order to qualify for a mortgage. But there are instances where you can get away with a soft credit pull instead. So either limit the amount of hard credit pulls or advocate for a soft credit pull instead. I think we are at number 10, new credit products. So you're going to want to Google this for your specific area. I know a lot of banks, national banks, and credit unions offer specific products and services for new credit products. So that could be something like a secured credit card, basically products that are starter credit products. So people that, just turned 18, or they're new to the country, or they've gone through a consumer proposal and now they need to rebuild their credit from scratch. So these products are really great for that. So that's a little tidbit for those that, are new to the country or want to rebuild their credit, or, they're just really young. Look at those and make sure you check that for your area, because it really does depend on your region. So thank you for continuing to watch all of the video. Here's the bonus 11th tip. Now this is for my self-employed business owners. Now the amount of clients that I have been working with that are self-employed but don't follow the rules per se in terms of declaring their income has become quite detrimental to certain clients in terms of them qualifying for a mortgage or not. So my suggestion is, consult with your accountant and find ways where you can start declaring that cash only business and make yourself a self-proprietor, learn about paying yourselves through dividends and through other means to save on taxes. But if you don't declare that income, simply put, that income does not exist and will not help you qualify for a mortgage. So although you're saving on taxes and you might be able to make your monthly payments quite easily, that really will shoot you in the leg in terms of your future borrowing experience. And you're gonna, guys, if you're living in the Western world, you're gonna need to be able to borrow in terms of your car loans, your mortgages, your business loans. You can't get away from this, guys. So make sure you're taking care of your credit. Make sure you're doing it now. Make sure you're doing it when you're young. And I know it can be kind of like an anxiety-inducing feeling to check your credit. So, you know, you can work with a professional and have them look it over for you or with you if you're afraid to do that yourself. But I'll leave links in the description below on where and how you can order a credit report for yourself and read it over yourself. It is in the cards for me to walk through how to read your credit report together. I don't know if you guys would be interested in a video like that, but please let me know in the comments below if that might be interesting to you. Let me know if any of these tips stood out to you specifically, or if I missed anything. If you guys have any tips that I haven't particularly said in this video, I'm happy to hear what you guys have to say. Until then, thank you for watching. My name is Rashad Abdul. I'm a mortgage broker here in Canada. So if you guys need any help on that side of things, you can always reach out to me. My info is in the description below. Thanks for watching, guys, and take care. Bye.